everyone. It's great to be here at DLD. This is my first time. I'm very excited. I've been working or dabbling with Crunchbase data since around 2008 when it was still part of TechCrunch. I've been involved in many events. I love events, and this DLD is superlative. So it's wonderful, wonderful to be here. I'm going to talk a little bit about the global venture markets. I'm going to look at the US, I'm going to look at Europe, I'm going to look at AI, I'm going to look at unicorns. So there's a lot to unpack. And I think what's useful about the data is there's a lot of conversations happening here. I hear a lot of themes and thoughts from people at DLD. And the data kind of underlines some of what you're talking about and also gives you insights into the future. So this is me, and these are the topics we're going to discuss today. You can find me on Twitter. So this is global venture funding, the size of the market over 15 years. And I think this is per Crunchbase data. And I think what you can see here from 2011 all the way through to 2020 is that the global venture ecosystem is a growing ecosystem and grew, even though it didn't necessarily grow over a year, cumulatively it grew over time. Interestingly, in 2021, in the midst of COVID, something unprecedented happened where venture completely doubled. We've never seen anything like it. And a lot of that funding was going into the late stage, very large rounds. And you'll see that in other slides in unicorn creation. The over 100 million rounds represented about 60% of venture. But what I experienced reporting on venture in the Valley is that it wasn't just the largest rounds that grew. When I talked to any investor, seed, Series A, they were all saying they're investing many more dollars, so bigger amounts, they're investing more quickly, they're investing their funds in a year rather than over 2 years, so everyone piled in. And the seed investor said, why wouldn't we pile in? Because this company will be valued up in 9 months' time, and I'll look very good to my investors, so everyone just threw everything at it. The markets corrected at the end of 2021. And interestingly, Q1 in 2022 was still a very, very strong quarter. And I think the reaction was, is this a blip? Is this going to be more sustained? How does the venture markets react? And it always takes a little bit of time, you'll see in these slides, for the venture markets to react. So it came down in Q2. And then since then, venture's been very flat, quarterly, around 300 billion a year. And I would argue that 300 billion is elevated. When you talk to people in the Valley, if it wasn't for the AI moment at the end of 2022, the venture markets would have been very, very depressed. There was a sense that they'd overinvested, too much money had gone in, the valuations were too high, and there was no ways this was going to be sustainable. So I think the AI surge completely shifted, and even though we are down and it was flat over 2 years, nonetheless, it would have been much more depressed if it wasn't for AI. This year, we've seen venture go up again around 30%. So this is the first year, and a lot of that has been driving to these very large rounds. But almost across the ecosystem, we're seeing growth in venture. This is what AI looks like. In our data set, the foundation model companies are tagged as AI. All the infrastructure from semiconductors, the data provisioning companies are AI, as well as the AI applications are also tagged with AI, the native ones, as well as companies where AI is central to what you're doing and delivering. So I think what's interesting here is we can see AI has grown over this time period significantly. It is now 50% of all global dollars are going into the AI market. This is unprecedented for any one sector. Not surprising because it's weaving through everything. And it's up significantly, I want to say it's up significantly year over year. It was around 34% last year. So it'll be interesting to see 2026, does it push above the 50% mark? And I imagine it would, because a lot of companies that are raising funding, besides some of the incumbents who might not have AI central, are in the AI sector. The foundation models raised a lot more in 2025. And so you'll see here it's 41% of AI funding went to the foundation model companies, and obviously far less last year. And again, an interesting question is, are they going to need to keep raising tens of billions of dollars to pay for compute in 2026? Or are some of these circular deals going to be able to kick in and allow them to ride that out? You know, OpenAI famously raised 41 billion last year, almost 7 times what they raised the previous year. And then if you look at Anthropic, they raised, sort of just 3 to 4 times what they raised the previous year. So again, are the 2 leading AI companies, which are US-based, going to need to raise in the tens of billions of range? Or is that going to settle? Or will other companies come in? We just had XAI, I think, raise 20 billion this year already at a much larger valuation than previously. This is looking at the concentration of capital. So again, 2025, we're seeing unprecedented numbers. You'll see 34% of all global venture went into 500 million or more. That is completely unprecedented looking at the history of venture. If you look at rounds 100 million and above, it's 59%, and that sort of matches what we saw in 2021. So 2021, a lot of funding went into these very large rounds, and we're seeing a similar dynamic, but it's into those even bigger dollars in 2025. The other interesting fact that we're seeing in our database is the dominance of the US market returning. And to be honest, in talking to people around AI funding, this was surprising to me, because when I talked to investors for our AI series, they said this is an API call. This, in a way, equalizes markets. Everyone has access to AI. They can use it in many, many different ways. I've met many companies here in Munich who are doing so, and so you would think it would be more equalizing than many more dollars going to the US. And I think the pull of the US market is so strong because of the amount of money, because of the size of market, because of the energy, and specifically we've seen a lot more of the AI dollars going into the San Francisco Bay Area. Obviously, not every company can be created in the San Francisco Bay Area and be supported there, but there is this huge glut towards the US, and it shows in our numbers. And I think if you go back to 2010 to 2014, the US was dominant. This is looking at the US versus global. 2015 to 23, it's below the 50% mark for US venture, sometimes more significantly. 2018, there was a lot more money that went into China. And then you can see it shift in 2024. And then 64% of all venture dollars that we're tracking, and this is seed, early, late, and private equity and corporate into venture-backed companies, went into the US market. So that was not a shift that I would have anticipated, but nonetheless, that's what we're seeing. Here's some of our reporting. It underlines some of the themes that I've just talked about. I do a quarterly report. I do monthly reports. Venture's shifting all the time. It's very interesting. I'm always looking at the data to see are there interesting different things that I can uncover to explain what's happening in venture, because there are a lot of shifts and changes as we go through this AI revolution. So every 5 years, there are very new things happening to investigate. This is a European venture market, which I know everyone here is very, very focused on. It includes the UK. It does not include Israel. And what you see is that, again, this follows the kind of global trends that we were talking about. Venture is a growing asset class, you can see, from 2016 to 2020. Interestingly, in Europe in 2021, it didn't just double, it more than doubled. So there was a massive expansion. I think a lot of American money and global money came into the European market thinking, we're kind of saturated in the valley, let's see what else is moving and shaking in Europe. And so a lot more money went into the European market. The European market stayed strong in 2022 for the first half, and then it started to come down. And I think what's interesting is, so you can see 2025 for Europe didn't pick up, even though the pickup was largely to do with North America picking up. We reported around 46% year over year. But I think what is interesting about Europe is every stage went up, but you can see it's the late stage which has come down the most dramatically over the last 3 years. So in some ways, it's positive to say, even though seed is not the same as the height in 21 and 22, it is larger than what we had pre-COVID, and the same goes for early stage, and the same goes for late stage. So even though funding is flat, it didn't necessarily grow this year, it's at a higher base compared to where Europe was pre-COVID. So it's in some ways, it's in better shape than it was then, and given the explosion of companies that I'm seeing here in Europe, I think that this data underlines that. Here what we're looking at is just Europe versus the US, just looking at those two different markets, because the US is such a leading market. You'll see here the peak for Europe as a proportion is the peak market years, 2021 to 2024, where Europe was around 17 to 18% of global venture. So this is of the whole global venture market, that's what Europe represented. I do think this Europe actually punches higher than the proportion seen here, and that's obviously because a lot of European companies do come to the US and then headquarter in the US. You know, Stripe is one of those. There's a bunch of them we find in New York. I go to a lot of events in the Valley. I'm based in Palo Alto, And I keep meeting young European founders who've decided they want to know what's going on, they want to be in AI, they want to come to San Francisco and do it there. And so they might have an engineering team or team members back in their country, but they want to be in the US and discover what's happening there. And so again, these numbers, Europe's punching above this weight, but it gives you a sense of the size of the European ecosystem. I think the other thing is Europe didn't go down, but the proportion went down, and that's just because of the massive inflows into the US funding markets. I think, we focus a lot on late stage. I just wanted to quickly focus on seed and Series A, and I know I'm going to have to plow through now. What this shows is the median, upper, lower, and lower quartile. We saw the biggest shift in 2021. 2022 still went up, 23 came down, and what's interesting is round sizes have gone up again at each of these stages, and we're seeing the same at Series A. And I think the reason for that is when I talk to investors, they're saying it's much more competitive, it's become much harder, it's much harder to get to the next stage. So if we invest, we're investing in fewer companies, although deal counts are up this year. We're investing, and we're investing more. And so every investor, they're more selective, and they're investing more at each stage because they think, whereas it might have taken you 2 years to get to a Series A, it could take longer in this market. The same for Series A. You'll see a similar trend. Again, surprised me. I thought rounds would be down. Post-2021, it all seemed crazy. It would be down from there. Quickly on unicorns, this is a unicorn board. It's now at 7.6 trillion. It's gone up 2 trillion in a year. That's to do with all the reshuffling of the top 20 and the massive valuations going to the largest companies. End of 2023, it was far lower. These are new unicorns by year. It's interesting. You can see it's depressed here. And here we're back above sort of pre-COVID levels. You can see the massive uptick in new unicorns in 2021. It was a crazy year, and we're still suffering the after effects of that. I'll show you. You can see it picking up towards the end of this year when new unicorn counts by month. So there's a little bit of momentum that we saw through the end of 2025, which I think is going to lead into 2026. This is an interesting slide. Things slightly came off, but what it shows is the massive uptick in the last year. At the end of 2024, the unicorn board was about 5.4 trillion. It is now 7.5 trillion, and it went up another 200 billion just because of the XAI deal. And we saw that around 2 trillion went up between the end of 2020 and 2021. That was actually even higher because a lot of companies exited the board that year, and I'll show you that as well. But a massive increase in values. Again, you might expect that, but we've seen this year. Some of our reporting on unicorns. This is the most interesting slide around unicorns, and what it shows is this is the year companies became unicorns and how many are still sitting on the board and haven't exited. And you can see 2021 completely shift the dynamic where there are so many companies sitting who have yet to go public, and because the market slowed from 2022 onwards, very few companies from these cohorts have gone. So there is a massive pileup of companies sitting on the unicorn that have yet to exit. She's calling. Okay, we're getting to the end. So on the plus side, what we did see in 2025 is we kept expecting post the market crash that M&A activity would pick up. It did a little bit, but we've had the highest M&A year, driven a lot by US companies in, I think, venture history with $55 billion exits. This is US and European companies. And so you can see, even when you look back to 2021, the M&A market has definitely picked up, not so much by the deal counts, but by the values going into those. And we expect M&A is going to continue to be very strong into 2026. The other thing that we're seeing is you can see the IPO markets completely fell apart in 2022. $3 billion IPOs in that whole year for US and European. SPACs still happened just because they'd been set up in a prior year, and some of those still went out. But really, the whole market kind of cratered. You've seen it's been very slow. This is the first year where there's been a bit more of a pickup. And when I talk to analysts, they say they want to go back to the 2018, 2019, 2020 years, that they want that kind of pace. So we're getting there, not quite in values. This is some of our reporting on the exit markets. So we're getting to the end. This is almost the last slide. What you'll see here, and I think it's interesting, from an M&A perspective, the values are higher than we've ever seen. For billion-dollar exits. And then when you look at IPOs, that's the price when a company first goes out, so not the first sort of market inflection. You can see we're kind of at 2018 levels, but still below what we're seeing in 2019 and 2020. And obviously, 2021 went off to the races. And a lot of the companies in that 2021 asset class have not performed well. Some have performed very well, but a lot of those didn't, which is why you had part of this big market correction. So what we're seeing, obviously, it's obvious AI has created a new cycle. Silicon Valley, where I live, is very, very exciting at this time. What I've seen here in Europe, and speaking to all of you, there's been a big shift in Europe. I think fintech, I look back at 2021, there were many different deals, but fintech was a very big theme in e-commerce. What we're seeing in Europe now is, whenever I look at the large rounds, it is deep tech. I'm sure that's going to show up in early stage, and when I meet a lot of the funds, they're very focused on the deep tech sector. This overhang or liquidity problem is still overhanging venture, and venture is still dealing with that, and we hope 2026 will be better. And as I say, the IPO market and the M&A pick up. We think we're going to see the biggest IPO in 2026. For the biggest IPO in our database is Facebook in 2012. We think that's going to be superseded this year. So looking forward, and thank you to DLD.